Alrighty, M15 is the next one on our list. M15 indicates for each item, select the type of account and then determine whether it's reported on the income statement or balance sheet. More briefly, let's write up to the side. Assets equal liabilities plus stockholders' equity. Obviously, I'm abbreviating here, okay? Assets equal liabilities plus stockholders' equity. This is the balance sheet. B/S stands for balance sheet. This is the balance sheet equation, okay? Then we have income statement. I'm going to abbreviate that I/S. The income state equation would simply be revenues, minus expenses, and that equals net income or net loss, okay? So looking at this, accounts receivable. Accounts receivable is considered an asset. If we know it's an asset, we know it shows up on the balance sheet, so we'll put balance sheet here, okay? Accounts receivable is the right to receive cash from someone else. Usually the journal entry associated with accounts receivable is you debit accounts receivable, credit some sort of revenue, like sales revenue. You sold something to someone, they now owe you money. Accounts receivable is a accrual accounting concept, meaning that we can have revenue but not have cash. Accounts receivable is the right to receive cash, but you haven't yet received the cash. Okay, that's accounts receivable. Sales revenue. Sales revenue is a revenue. Okay, revenues go on the income statement here, so we have I/S. Remember that I told you one of the common journal entries are with accounts receivable, debit accounts receivable, credit sales revenue means you sold something. Okay, equipment. Equipment is considered an asset, or more namely, I'm going to write this off to the side even though you weren't asked to, it's a fixed asset, okay? When we get into chapter 2, we're going to differentiate between current assets and fixed assets, or long-term or non-current assets, okay? This is a fixed asset. Assets, as we see on our equation, show up on the balance sheet, okay? The next one is supplies expense. Supplies expense is an expense, just like its term says, okay? Supplies expense. Expenses show up as our equation tells us on the income statement, so this is income statement. Next is cash. Cash is considered an asset. More namely, this is considered a current asset. Accounts receivable is also considered a current asset, okay? Cash is exactly what it says it is, cash, and we know that assets show up on the balance sheet because of our handy equation we wrote out here. Advertising expense, again, accounting's not a mystery. Use the terminology that it indicates for you. There's a couple instances where a term might have the word revenue in it or might have the word expense in it, but it's not exactly as it says it is, and we'll go over those nuances when we get to them. But for now, if you see expense, it's an expense, okay? So, write down expense here. Expenses show up on the income statement just like we have in our equation here, so this is an income statement. Next is accounts payable, okay? Accounts payable is considered a liability, okay? A liability. Again, based on our equation here, liabilities show up on the balance sheet, okay? Accounts payable is kind of like the opposite side of the same coin in relation to accounts receivable, okay? Accounts receivable is the right to receive cash from someone, okay? Accounts payable is the obligation to pay someone, okay? When you have an accounts receivable for someone, that means someone owes you money. What they see in their accounting is an accounts payable. They owe you money because you have an accounts receivable, all right? Retained earnings. Retained earnings is considered stockholders' equity, okay? Stockholders' equity, again, shows up on the balance sheet equation. It's this last part of the balance sheet equation. Stockholders' equity has two basic components that we're going to talk about today. And that is contributed capital, which I'm going to abbreviate CC here, and retained earnings, okay? Retained earnings is just what it says it is. It is the earnings that the company has retained, okay? We'll get into this concept later on when we talk more about stockholders, but think about what you are if you hold stock in a company. You're one of the owners of that corporation. You own stock in that corporation. Therefore, you get to share in your pro rata portion of the earnings. Well, what retained earnings are earnings that the company has made, okay? Earnings that the company has made that they then hold on to or retain to reinvest in the company and then hopefully earn a bigger profit, okay? Hopefully do better, right? Stockholders' equity is part of the balance sheet as we talk about in the balance sheet equation here. And that's M15. Let me know if you have any questions. Thanks.